Everyone, Tony from WorkGuru here, and I just want to give you a walkthrough setting up retentions in WorkGuru, particularly for our construction clients. The way you set up a retention in WorkGuru is to create two products, one for retentions held and one for retentions claimed, and map them to the relevant balance sheet account that you want to track your retentions in. So in this case, we're mapping them both to the retentions account. And we've actually got this set up as a liability account. There's a reason for that. But you map them both to the same account when you set up your products. And so that the ins and outs will go from that account correctly. To then use a retention on a project, when we set up the job, we want to add two separate line items to the project to add one for the retentions held and one for the retentions claimed on our forecast for the job. So in this case, I've got a $6,500 project and I've got a 10% retention, 650 held by the client, and then we'll claim back that 650. Each of these has zero cost. So they're just income line items at the moment, which balance each other out to zero change. When we go and have a look at that now, when it comes to invoicing a project with retention line items on it, very simply, we invoice it as we normally would. And if we're not claiming the retention immediately as it's being, obviously claimed, we actually just delete that line item off. So we're going to claim 50% of this project, assuming 50% of the retention. You can obviously change the percentage or the amount of the retention, and we claim that line item. When this goes through your accounting platform, you've got the relevant revenue line item and the retentions held. So your accounts receivable only sit at the 3,200 as opposed to the full amount, not including retention. But this goes to the balance sheet. So your accounts receivable is that 2925 ex tax, and your balance sheet is showing that $650. The reason we had it as a liability account before is because this is a negative amount. So it's a negative liability, which will show as an asset on our balance sheet. When you go to claim that back and claim the retention, we're going to obviously just have that retention line item claim. And we're going to have, it's just a single line item there, which, reverses out that retention and claims the remaining balance on that line item. So if we claim that out, for example, and we'll just get rid of those two, we'll claim all of that retention balance back. Very simply, then we're going to just have the line items that we've claimed back. And all that does is it moves it from that retentions count on the balance sheet to the accounts receivable. So now we have an accounts receivable that balance out our liability account. The AP and AR are correct, and they have to stuff around with journals again. Key thing to notice is that on this particular line item, we have included GST tax on income and this particular setup. But because you do this on a product level, you can specify the tax treatment that you want that works for you. So set it up how it works for you. And that's a quick overview of retentions at WorkGuru.